Okay, so the second methodology we cover in this chapter is non-statistical sampling. Okay, so this is very common in practice. I'm sure you remember from chapter 8 when we talked about TOC. You guys know practitioners love non-statistical sampling, and they really tend to not do a lot of statistical sampling. That's relatively rare when compared to the amount of non-statistical sampling that we do in practice. And in non-statistical sampling, the sampling units generally consist of an actual customer account or individual line item or balance. And we have sort of these simple steps in non-statistical sampling. So we don't have a full list of, 400 steps like we saw with the MUS. We just kind of have 4 basic overall steps. And the first step is to identify any individually significant items. And this is another big reason why you would choose to actually perform non-statistical sampling, or a big motivation. So a big motivation for non-statistical sampling would be because you have a number of items in the population that are individually very significant, possibly even individually larger than TM or individually larger than materiality. And because of that, you're not willing to accept any sampling risk with respect to those items. You want to test 100% of them. And so therefore, you're not doing random selection, you're not doing MUS with respect to those items because you want to guarantee that you test them. And you're, in this sense, using your judgment, right? You're using your professional judgment as an auditor, which makes it non-statistical. So items don't just have to be individually significant in the sense that they're very material. It could also be that you consider them to be very high risk. So again, remember with non-statistical, we're just incorporating our judgment in some kind of a way. For non-statistical sampling, we determine the sample size using this lovely formula. And you see that it's just the book value of the portion of the population that we're sampling from. This is relevant because there may be a portion of the population that you are testing 100%, and we would not include that in this numerator here. So don't include anything you're testing 100%. And we'll see an example of that later. All right, and the denominator is just your tolerable minus expected misstatement, which we talked about before is kind of this idea of precision. And then you're multiplying it by a confidence factor. Okay, and the confidence factor consists of your desired level of confidence, which this is similar to confidence level, right? But because it's non-statistical sampling, we cannot be as precise as saying, oh, my desired level of confidence is 90, 95, 99. No, you cannot get that precise. That's always going to be the disadvantage of non-statistical sampling, just like we learned in chapter 8. So you're going to be able to say, though, okay, I want to be low, moderate, or high. We can get to sort of this level. And then your assessed RMM for this particular account will also weigh into your confidence factor. So whether it's low, moderate, or high. So remember, the 2 things going into this will be the IR and CR of the account. So things like how good the controls are, things like this are going to come into play. So based on these 2 things, RMM, desired level of confidence, you'll come up with your confidence factor, which is also going to go into the formula. This formula can also help you if you're thinking back to that table that talks about if relationships are direct or indirect, because you can kind of see, looking at the formula, this should be a direct relationship, right? This should be a direct relationship, this should be a direct relationship, and this should be an indirect relationship, right? So it kind of holds true if you're thinking through this formula. For those of you that are more mathematically minded, the formula might be more helpful than that table. In non-statistical sampling, when you're calculating the sample results, you generally use this approach called ratio projection. So assume that in a particular portion of the sample, you find $1,500 of misstatements in a sample of 15,000. So the ratio is 10%. 1,500 over 15,000 is 10%. And so then if you want to project that 10% across the total population, you would do 10% by the 200,000 of your total population, and you'd get 20,000. Okay, so I'm gonna now let you take a pause and read this question and do ratio projection. This question is, the auditor finds a 3K misstatement in a sample of 100K. So this seems like a 3% error rate, right? And then we want to multiply, if we're using ratio projection, I would want to multiply that by my 1 million to come up with my total projected misstatements. So hopefully you got answer C. Another methodology you can use, which we won't be using in a lot of our examples, but sometimes you do see, is difference projection. Okay, so in difference projection, it actually uses a by item approach. So you can assume misstatements in a sample of 100 items, total 300. So you have an average of misstatement of $3 per item. If we know then the population contains 10,000 items, we would use our $3 per item, multiply it by 10,000 items, and we would wind up with a misstatement of 30,000. Now we're going to walk through an example of non-statistical sampling with stratification. So we have the auditors of Calabro Wireless Service. They've decided to use non-statistical sampling to examine their AR balance. And they have a total of 11,800 accounts, a balance of about 3.7 million. And they've stratified their accounts by size. So they have 15 accounts greater than 25K, 250 greater than 3K, and then everything else is under 3K. Here's the book value of those respective accounts. And then it gives us information that we need to know for that confidence factor. So RMM is low and confidence is moderate. So now I plug those in to get my confidence factor. Tolerable misstatement is 55, expected misstatement is 15, and all customer account balances greater than 25K are to be audited, which means these 15 accounts greater than 25K, I want to test 100% of them, and really I'm interested in sampling from these two portions of the population, right? This portion of the population, I'm testing 100%. So when I go through and I calculate my sample size, keep in mind that when you use this formula, remember we said the book value that goes in the numerator, you should not include any portion of the population that you're testing 100% in there. So the portion of the population that should be included in the numerator is just these two. Okay? So that's why here when it's working out this formula, it's actually saying 3.7 less the 550, right? This 3.7 here less 550. So that's your numerator. Your denominator, the tolerable less expected, is just coming from here, my tolerable less my expected, and then you're multiplying it by your confidence factor, which remember is just coming from this table, and it's just coming from the information here about RMM and confidence of moderate. This will give you a sample size of about 95. There's no rule here about rounding up versus rounding down the way there was with kind of the tables and attribute sampling. So imagine now you've sent out your positive confirmations to all these accounts, and your total number of items that you're testing, of course, is 110, because you have the 95 that you're sampling, and then the 15 that you're testing 100% of, right? And so this results in total items tested of 110. And of these items, most of them came back good, but 4 contained errors. And the results are presented here. Now, usually with non-statistical sampling, when the results are presented to you, rather than giving you individual misstatements at the account level, the way it does in MUS, it gives you results, misstatements by stratum or layer. So in this case, in the greater than 25K layer, my amount of overstatement was 500. My over 3K layer, my overstatement was 2,000. And my under 3K, it was just 250. So the first thing you're going to do here is calculate your misstatement ratio. And remember, the purpose of you calculating this is so you can use the ratio projection for each individual layer. That's what you're doing here. And then when I'm calculating, you can see the amount of misstatement is just coming over from the prior page, right? That's just amount D or column D. Then when I calculate my ratio of misstatement, all that's happening is it is just D divided by the book value of the sample, B, and then multiplied by the book value of the layer, A. So very simple, it's just the ratio projection that we were doing earlier. It's just doing it on a layer by layer basis. For our first layer here, we don't need to do this ratio projection because we tested 100% of the layer. I don't need to project a misstatement across any proportion of the population that I didn't test because I tested 100% of the population, right? So I know the exact, precise, factual amount of error that is in that population because I tested all of it. And that exact, precise amount of error, it was $500. So I can just bring that straight over, and it's not a projection, right? That is really a factual amount. For the other layers where I was sampling, I do need to project a misstatement across the layers, and I do that with the ratio projection technique we looked at. So I'll take the amount of misstatement divided by the book value of the sample that I took from that layer, and then multiply it by the book value of the layer itself, right? So that's all I'm doing here, which is giving me my projected misstatement for that layer. Do that, then I add them all up, I get 10,800. Now, here's the $10,800 question. What do I compare this number to? Can I compare this number to TM? Really, to answer that question, we need to think about whether that number contains an allowance for sampling risk. And I don't think it does, because in no part of this calculation did I do anything that added in an allowance for sampling risk, right? In my other calculation, wherever it was, for MUS, I did all kinds of things that built in an allowance for sampling risk, right? I had this basic precision line here. I was multiplying by this column here. The purpose of all those things was to build in an allowance for sampling risk. But I didn't do anything like that in my non-statistical sample. All I did was kind of project the misstatement I found across the layer, and I didn't include any kind of allowance. So I'm thinking I cannot just compare this number directly to tolerable misstatement, as this would not be fair. So what you're actually supposed to do here is to compare your projected misstatement to your expected misstatement amount. And you cannot actually directly draw a straight up conclusion the way you can with MUS. So with MUS, because you've calculated that upper misstatement limit, and the UML is, again, like with attribute sampling, the UML is like your worst case scenario. And if your worst case scenario is less than TM, you can be pretty confident that the account is correct, right? But with non-statistical, you have your projected misstatement. And if your projected misstatement is less than expected error, you're kind of confident, but you can't be as confident as you were with the MUS. And so instead, what you say is, all right, I feel like there's an acceptably low risk that the true misstatement would exceed tolerable misstatement. So you think basically that there's an acceptably low risk of incorrect acceptance. And that's all you can really be comfortable with kind of concluding there. But that's good enough. Because remember, if we think back to chapter 5, we're looking for persuasive evidence, not convincing evidence. So this will be enough to persuade us, and we can kind of draw a reasonable conclusion from this. So one final question before we shut this chapter down. I will let you take a pause. This question is, in sampling methods used in substantive testing, an auditor most likely would stratify a population into meaningful groups if. So thinking about this question, before I even look at my answer choices, right, I see this word stratify, right? And I kind of immediately know, oh, this is kind of like my non-statistical sampling examples, right? Because that's what I was doing here. I was stratifying my population into layers. So I know it's going to be something to do with non-statistical sampling. I also know the reason why I was stratifying this population into layers was because the sizes of the various accounts were really different. And some of them were very large. Some of them were individually significant. So I wanted to make sure I tested those. So now coming back and looking at the answers, I see A, probability proportional to size sampling is used. So we know PPS is the same as MUS sampling. So this answer is inconsistent with the question. So no. B is the population has highly variable recorded amounts. This sounds pretty good, right? Because some of the amounts are very large, others are small, others are medium. That sounds like the example we just did, right? C, auditor's estimated tolerable misstatement is extremely small. All right. We talked about this. We know in chapter 8, not in chapter 9, but in chapter 8, we know when TM is very small that actually makes our sample size blow up, right? And oftentimes, if TM is really small, you actually shouldn't do sampling, right? Because it's kind of an indication that maybe you just can't tolerate any error and you should test 100% of the population or use some other kind of alternate testing technique besides sampling, right? Because if your TM is really small, you're going to have to be extremely precise. And lastly, we have D. The standard deviation of recorded amounts is relatively small. So this would mean all the accounts are about the same size, right? If the standard deviation is small, that means all the accounts are about the same size. So D is actually the opposite of answer B. And since answer B was kind of our most likely choice up until this point, it's good to see that D is the opposite of it, because that means I can easily eliminate D. And we said C is off topic, so it's out. So I'm just left with B as my answer choice here, which hopefully is what you picked too.